Hello and welcome to the day ahead. It is Wednesday, July the 27th. I'm Andrew Gagan. Let's get into the markets. Wall Street finishing the overnight session lower as a profit warning by Walmart dragged down retail shares, and exceptionally weak consumer confidence data fueled fears about spending. Consumer discretionary stocks dragging down the S&P 500. As all eyes turn to the Fed's rate policy decision tonight, our time. Amazon was the biggest loser on the Nasdaq, despite saying it would raise fees for delivery and streaming service Prime in Europe by up to 43% a year. Microsoft shares fell in extended trade following news the company's fourth quarter results failed to meet expectations. Revenue and income fell short, as did revenue from Azure and other cloud services. Google parent Alphabet shares rose in extended trading despite news its second quarter earnings missed targets just slightly. The world's biggest seller of online advertising, avoiding the deep disappointment of rivals, including Snap, which is slowing hiring due to a challenging financial outlook. Meantime, Coke shares soared on news the company raised its full-year revenue forecast, demand for sugary sodas remaining strong amid high costs for key inputs such as corn syrup and aluminium cans. Elsewhere, McDonald's shares rose after beating quarterly expectations. Global same-store sales jumping nearly 10% in the second quarter compared with expectations of a 6.5% increase, with the CFO saying sales were boosted by an increase in menu prices. However, the number of customers per order declined. Drive-through sales, which soared through the pandemic, dropped back to pre-pandemic levels, and he said he expects these inflationary pressures will continue to impact margins for the remainder of the year. And General Electric surprised Wall Street with higher quarterly profit and positive cash flow as recovery in the aviation industry propelled its jet engine business, sending its shares higher. Well, the global economic growth forecast has been cut by the International Monetary Fund, warning that risks from high inflation and the war in Ukraine could push the world into recession. The IMF expects global GDP growth will slow to 3.2% this year, revising its April forecast of 3.6%. Pointing out that world GDP has contracted in the second quarter due to downturns in China and Russia. It's also cut its growth forecast for next year from 3.6 to 2.9%. Well, US consumer confidence has fallen to a 1.5-year low in July on concerns of persistently higher inflation and rising interest rates. July's Conference Board survey showing consumers are reassessing their spending plans, intentions to purchase a major household appliance, falling to its lowest level since the survey began in 2010. Elsewhere, new home sales in the US tumbled to their lowest level in 2 years, in a further sign of a slowing economy. This comes as the Federal Reserve is poised to raise its key lending rate by another 75 basis points at its meeting tonight. US Treasuries are mixed ahead of the Fed's policy decision, the 10-year yield falling to 2.8%, while the 2-year is at 3.06. Major currencies were weaker against the US dollar, the Aussie dollar currently sitting at 69.6 US cents. Well, the local share market is set to open lower as negative global sentiment emerges ahead of the Fed's policy decision. ASX futures are currently off more than 0.5%. Global oil prices have fallen, Brent crude off 0.7% on news the US government will sell an additional 20 million barrels of oil from its strategic petroleum reserve in an effort to stabilise prices. And Europe faces a tighter squeeze on gas, with the EU energy ministers approving a proposal for all EU countries to voluntarily cut gas use by 15% between August and next March. The iron ore futures price is up, while nickel fell 3% and gold is slightly weaker as the US dollar strengthens. And Bitcoin continues to lose support, tumbling to around 21,000 US dollars. And that is your day ahead. We'll see you again tomorrow.